Good afternoon, all back, hope lavished. I'm now going to announce the next speakers, and that's Menno and Marnix, or M&M. That's Menno Broos. Menno is the project lead for the digital euro at the Dutch Central Bank. He's also a member of the European Steering Group at the ECB. And Marnix Blom. Marnix Blom is currently the strategy manager for the Dutch Payments Association, of in Dutch de Betaalvereniging Nederland. And they are going to enlighten us on digital currency and funding platforms. So Menno and Marnix, where are you? Success.
Thank you. So we made a little division of labor, and I will start outlining the current proposals for the digital euro, or retail CBDC, as the project is also known. And then Marnix will follow up with some of the considerations that the Payment Association has. So my name is Menno Broos. I'm the project lead for the digital euro at the Dutch Central Bank. And today I will talk about what we call the future of our public money. And I say public money to distinguish with private money. Private means of payment. Private money is the money that is created and also guaranteed by private firms, banks obviously, and public money is the money that is created by the central bank, a public institution. And currently there's only one kind of public money, and that's cash. And I don't know about you today, but many of us do not really carry cash along, at least here in the Netherlands, here in Amsterdam. So that makes us think as central bank about the future of our public money, because we have been issuing central bank notes for over 200 years in the case of the Dutch Central Bank. But it's very interesting to think about what will happen in the next 200 years. So looking at these trends, there's mainly two interesting cases you can make for the digital euro. So first of all, it's about this digitalization of money and of public money in particular. So if we look at the euro system as a whole, so all the countries that have the euro as a currency, we see that cash payments are falling from 72% only 5 years ago to 52%, and that's a really strong trend that we are very adamant about. Secondly, and obviously that's the same coin but the other side, is that card payments are rising from 25% of all transactions to 39%. And as I said, the digital euro would then be necessary to keep public money available in a digital age where we use less and less cash. So that's the one trend, the digitalization. Secondly, it's about making Europe more independent in payments, and obviously we talk about geopolitical developments then. Providing an infrastructure that is independent from non-EU providers. And as most of you probably know, the current payment infrastructure that we have, especially in shops, what we call point of sale, is very much dependent on US big techs and big card schemes. So by making the payment system more independent of these US players, we also make the whole payment system more resilient. And we would even go further than that by adding an offline payment option. So that means that even if the terminal that's on the counter in the shop doesn't have any internet connection, you can make a payment and still have the economy rolling in case of, for instance, a cyber attack. So that would obviously be very much in line with what we do as a central bank, because we want to keep the payment system resilient. There's another positive side to it, because by introducing a digital euro, we think we could also help scale up other European private means of payment. We would open up terminals, we would open up standards, and that could help private payment solutions to also make progress in building up a European network. Now, how would that work? So, what would the digital euro look like in our current investigations? Basically, you would get digital euros from an ATM or from your private account, very much like you would get cash nowadays. So we start at the left. That's the funding sources. That's where you get your public money now, and that is where you will get your public money in the future. These digital euros you can deposit in your digital euro account, and the account will be directly in the ECB app, or it will be with a bank. That's still under negotiation. And the money that's in this account will be directly issued and guaranteed by the ECB. Now, you can do digital euro transactions with that money. You could use it for all kinds of payment options, online purchases, offline, in-store, P2P, up to a certain limit. So what we don't want is that all the money that's currently in bank accounts will be transferred to digital euros, because that would sort of open up a floodgate and make a bank run possible. So what the regulator is currently discussing is to have a holding limit for these digital euro accounts. To still make it easy to pay with that money while you have a holding limit, you could think of automatic transfers or overflows going from one account to your private account, and therefore making sure that you always have enough money in your account, but not too much. So these are still the levers that the co-legislators and also the ECB are tweaking in order to find the right balance between having a payment instrument that is useful for day-to-day transactions, but not too disruptive for the current payment system and private money system. The distribution would go through banks and PSPs. So for many of the companies present here, I think they would notice that something has changed to the system, because banks would have a different role in distributing this kind of public money, where they would nowadays maybe only have a role in distributing cash. The payment institution is mainly, the payment system or the payment transactions are mainly used for the public. We don't see a lot of business-to-business transactions in digital euro, but obviously all the companies that would have retail operations would also notice that there's a new money in town. And that's because there's a lot of legislative support for this proposal, at least from the European Commission. And the European Commission will make sure with their draft regulation that the digital euro will be accepted everywhere, and also there will be a distribution, that banks will also be obliged to distribute the digital euro. So that brings me to the legislative side of the proposal. This is not something that we as central bank are setting up, but this is basically politicians, European Commission, saying we want this payment system to be available for the public, and therefore always accepted. We want to give people the right to obtain the digital euro, to make sure that they have an alternative to their current bank accounts. We want to include also financial inclusion. We want to make sure that people from vulnerable groups can have access to this proposal. We want to make it free. Obviously, you all know that free for a consumer does not mean that the system as a whole is free, so the cost will need to go somewhere else, and that's these fair economic incentives that the co-legislator is now deciding on. And it will have very high privacy standards by design, but also by law. Now, this is just a very quick overview of what we are doing in the digital euro space. So this is basically the current proposal as we have outlined it as the ECB, but also as the co-legislators, or in this case, the European Commission sees it. And the question I always get is when can we see it, when can we use it, what's the timelines? So while there is a lot of support from the European Commission on this proposal, the legislative process is not yet finished. So what we see is that we are working together or in parallel with the legislative process to get this proposal further. So the project at the ECB is evolving on a technical level, making sure that we are ready and we have the technical specs when we get the green light to issue. And at the same time, in the coming years, we will have to wait for the legislator to adopt the regulation. So the message here is the ECB is working in parallel with the legislator and will only decide whether to issue a digital euro once the legislation has been adopted. In this case, the ECB is not completely independent. We will have to wait for the co-legislators. So being a bit more specific on the timelines then, and that's my last question before I wrap up and I hand over to Marnix. We are committed to be technically ready as soon as there is a political agreement on the possible issuance of the digital euro. We think that the legislation could land in the course of 2026. So that means we have about a year of some tough discussions ahead of us. And after that, us, but also PSPs and banks will need to invest in the necessary infrastructure. So that means that the first possible launch date for a digital euro could be as early as 2029. We are currently in the preparation phase. So this box in the middle, that's been about for 2 years. We're looking into, for instance, which providers could help us build this project. And the next phase is in November 2025. And the Governing Council will make a decision on this next phase at the end of October. And then also we will explain what we will do in this next phase while the legislator is still deliberate or discussing the draft regulation. So that's the short introduction from my side. I think Marnix will go into more of the implications for banks and other payment institutions. And after that, we will do the Q&A when we have both finished our presentation. So hold your horses, keep your questions for later on, and thank you for your attention.
Thank you, Menno. Actually, I'm really honored that you guys are all here, because opposite this session is a session of the King of the Netherlands delivering his troonrede in The Hague. So glad you guys are here, and I'm also glad that I'm here because Menno asked me to add the perspective of private industry to the plans of the digital euro. So that's what I intend to take you through in my part of the talk. How does it fit into the current payment infrastructure and what private institutions are doing there? So about us, me, I'm Marnix Blom. I work for the Dutch Payment Association, the betaalvereniging, and we're a member association of banks and EMI's and payment institutions that together make up the private side of the payment industry. So together they, our members, run the payment infrastructure really. We're about 20 in size, helping out to make that work in order to create a safe and reliable, accessible and efficient payment infrastructure. Ensure that there's a dialogue with stakeholders. It's not just any service payments. Everybody needs to do that. So it's good to have the stakeholders on board. We enable coordination. We disseminate knowledge about the industry. And this is really where this topic comes in. We try to improve payments policy before it's all set in stone. So payments infrastructure is really an infrastructure. So it's not that exciting for many. It's like roads. It helps you to get somewhere. It helps you to get your money across to someone else. But it's not in itself a goal. Nobody outside of my colleagues really get excited about payments. And the rest of the world just needs to get it out of the way before they can leave the store. So keep that in mind when we're talking about improving the payments infrastructure. I'd like to take you through what the payments infrastructure is like today, have a short dive into what's missing or what might be missing, what the digital euro aims to do there, and set up some conditions for how that might succeed to have this digital euro resolve all these issues that we still see in the payments infrastructure. So instead of roads largely a public game, payments is a hybrid mix of public and private contribution. The money you will spend is typically in a bank account. That's a private undertaking. Your bank is running that for you, but behind that is the central bank doing settlement for those payments. They also do the coins and notes, which are also part of the payments infrastructure. There's a lot of regulation around it to make sure that it goes well and no money is lost along the way. And there's a lot of standards to make sure that all this network work is actually working flawlessly. I pay with my bank to you who have another bank, and then it needs to technically, of course, be working, and lots of standards and arrangements are below that. So if we look at our current payment infrastructure, I would say, and many concur, that in general payment needs are well served by what is available today. There is not that much missing in the payments infrastructure. If you look at it on an absolute scale, but also relative to the rest of the world, there is not much we can complain about here. But if you look deeper, there is always some things that you could highlight that require improvement. First of all, well, the European thing. Payments is highly local. Payment habits are local, and payment methods are local. If you're Dutch, you're very well aware of that, probably because we do our payments on the internet, mostly with Ideal, which ends at the border. Some merchants across the border are very smart and understand that they have Dutch customers as well and accept Ideal as well. But if you're somewhere in Italy paying for like an opera ticket, or you want to go to a museum there or book a hotel, typically those merchants will not have your Dutch favored payment method. So there is something there that maybe would require improvement. And if you look at the physical euro, the coins and notes, that works across the entire eurozone. So it would also make sense to want something like that for digital payments. So there is one improvement for you. And this is not only on the internet, it's also in payments at the store. There's also lots of different solutions, lots of local stuff going on that is not really European in the sense that it spreads across the entire Eurozone or Union. Then there's this development around cash. Less and less people are using cash. We are very much using less cash. The Nordics are very much doing it, but also the rest of Europe, including even Germany, is on a declining scale with cash, which is in itself all nice and good because it's a very inefficient and payment method. It requires a lot of physical logistics, and lots of payments nowadays are taking place in an environment where cash doesn't even make any sense, being the internet. So in itself this is nice, but what we're getting back is a lot of American infrastructure to run our non-cash payments. So these four businesses are crucial to our payments infrastructure. If you want to pay in shops or in an e-commerce context, well, they're all American. They're not European. There is no control from Europe on what's going on there. So it's while it is the services are great, it doesn't feel right from a strategic autonomy point of view. And to add to that, there is also really a need for a more operational resilience. Look to either side of Europe, and there is reasons to want to be in more control about our payments infrastructure. Someone to the west of us might just instruct the companies running much of our infrastructure to do something else than they're doing today. That would not be a very nice experience. Someone to the east of us might just want to just disrupt things, which is also not nice, and both really point in the direction of for policymakers to want to have a better resilient infrastructure using stuff that we have more control over, and that is also redundant in the sense that if the one thing doesn't work, you would have something else. So those are really things that if you look at improvements to the payments infrastructure, you might be thinking of for the digital euro to solve. So enter the digital euro, our local central bank digital currency product. It will be owned by the ECB. They will also pay for a lot of the heavy lifting, so the infrastructure costs that need to be taken. They will not charge it to the users, but as Menno already mentioned, it will end up somewhere, those costs. So it will be like a burden on the general public, and you might see it as a form of taxation. It will have its own legislation to enable what it does and doesn't do. Private institutions will also be involved. They will do the distribution. So the contacts with the end users will go through private institutions, mainly banks. Others can also join, but banks will have a legal obligation to conduct this role, which is also an interesting aspect of this digital euro, and that makes us very involved in the discussions around it, because well, we as private industry will be obliged to do something, so we really want to be in the discussion about what that is as well. So it will be payments for individuals mainly. You can pay other individuals, you can pay merchants, you could pay receivers in the public sector, but it's very much not something for businesses to do procurement or anything else of that kind. It will feature an offline mode alongside an online mode that will help to make the infrastructure more resilient, because you don't need a network connection for a payment to succeed. Most of the other digital payments do require this, so if there's a disruption, all bets are off and you can't pay. And this would really add something to the infrastructure in that sense. It will be regulated in terms of pricing towards the consumer. The regulation there says it will be free towards the merchant. The regulation there says something about what it should cost relative to other digital payment means that the merchants accept. And it will be regulated in terms of the money that is distributed between the private institutions working to create this infrastructure, the ones distributing to the consumers and the ones distributing to the businesses. And then finally, to make it all work, it will have mandatory acceptance for merchants. So this is really unseen in payments up till now. There's always a big discussion around cash. Is it mandatory to accept that? Well, currently we say no. Everyone can just decide that for themselves if they run a business. This one will feature at least some kind of mandatory acceptance, which to make it work is of course a big help, because then on the acceptance side you're ensured of the possibility to use it somewhere. Now, if we look at this solution, we can also take the analysis, what does it take to make such a thing successful? And I've listed a number of aspects here to check there. So this is the two-sided market aspect. So payments is special. It's not like selling cookies in the sense that there's two different kinds of customers involved, the payer and the payee, and both need to enjoy the type of payment that is put forward towards them. Otherwise, they will not go and do it. So what does it take to be attractive as a payment method? Well, on the consumer side, cost is a very big thing. If it costs anything, basically consumers are out because they want to not experience any direct costs in their payments. They're already paying for something, and to also pay for the payment itself seems like an outrageous proposition for consumers. It needs to be really easy and accessible, so in terms of user experience. If you look at, for instance, the mobile payments, or paying with your mobile phone in a shop, this is a really nice example of how important this is. There was a lot of possibility of doing mobile payments already before Apple Pay was available in the Netherlands, and it never took off. And then Apple Pay, with a very good user experience, was introduced in the Netherlands, and a huge curve of adoption immediately showed. So big that now paying with your mobile phone is almost as big as using a contactless card. It's really 50-50 right now. So it really depends on the details to get your adoption there. Well, also for consumers, of course, there can't be any risk in the payment. Privacy concerns should be dealt with. You wouldn't want to have your details about what you're buying, from whom and where, floating all around. So at least it's a perception thing, but consumers need to feel good about this. And lastly, there need to be an incentive to adopt. Everything is fine right now, basically, for consumers. There is no need for them to do something specific. So if you don't present them with something that is really compelling, they'll probably just continue doing what they're doing right now. On the merchant side, also some criteria to be successful. Cost relative to other ways of receiving your money. Reach. If you present a payment method, it should also represent a significant number of payers that can use this. Otherwise, it'll be too small, and the burden of accepting this kind of payment is really not worth it for merchants. And transactions need to convert. If it doesn't work, if it's clumsy, if people want to pay but they end up not paying because something is going wrong, the merchant is out very fast. So then there's another side. It's not just about payers and payees. There's also the ones providing the services, in this case the private institutions. In the digital euro, they will have two roles. They will do the distribution, so towards the customer service, delivering an app, ensuring that everyone knows how to do it, enrollment, all these kinds of activities. And on the other side, there's in the infrastructure that the private institutions run, there is the connection between the new system of the digital euro and the existing account system, so that you can put money from your account to the digital euro and vice versa. So both of them will need to be built and to operate, which is a cost. It also draws on resources that banks would like to maybe spend on other things than projects that are basically compliance and need to do it, but they haven't asked for it. The banks will be exposed to risk around consumer protection, for instance. If something goes wrong, consumers will expect to be reinstated of their funds, and if the money is already gone at the receiving end, well, typically in payment systems, the entity in the middle, the bank, ends up paying for that. There'll only be, as I was also told, regulated revenues. They're, according to banks, unlikely to cover the cost. So all in all, not really a lot of enthusiasm for banks for this new role yet. And there is also a general lack of upside. It's just something they need to do, but as it is payments, and we have already payments, it's really hard for banks to see what this would add to the package for them and their customers. So then society also needs to be satisfied in what's resolved. It needs to improve on strategic autonomy. We already addressed that. It needs to create a better operational resilience and contribute to a single market in Europe or the Eurozone. Well, that all is basically in the plans, but it does depend on adoption. If you just make the product and it falls flat, you still don't have much to speak for. And the other side is it needs to fit into the bigger picture of how we organize our society and the payments industry. So it has to fit in with competition, an open economy, the rules around who can provide services here. Monetary stability is of course a big thing. If this works really well, but it sort of depletes the banks of their funds, that also wouldn't be something to look forward to. And it needs to be, of course, a proportional investment to go into. And all these items are a bit of an issue that still require a lot of discussion for everyone to see things in the same way. So in conclusion, this is my last slide. To solve this whole riddle would mean that everyone in payments, all these stakeholders, the consumers, the merchants, the banks, and society at the same time see the benefit of the introduction of such a thing. And this is really a hard puzzle. And also it is new, nobody has ever done it before. So this is really peak innovation. And as we all know, innovations can succeed, but they can also fail. So and we shouldn't count on it to be successful regardless. We really should also move ahead cautiously. So I think, speaking from the industry, the main open issues for the digital euro that remain to be resolved is giving users a good why. Why would I go and use it? As there's already so many solutions for doing payments, and I'm not interested in doing payments per se. Just let me do my shopping, please. There's the user trust issue. The system gives the impression of the central bank administrating all the transactions. So there is a surveillance risk perception issue there. What if the central bank uses all this data to follow what I'm doing in my private life? Doesn't really feel good. It really needs addressing. There's the adoption issue. You can make it, but others, this is the horses. You can bring the horses to the water, but you can't make them drink. Will the users actually drink the digital euro and go and use it? This is really the benchmark of success. And if we do it, do we do it in a way that money is well spent? The resources currently envisaged are quite big. The central bank has over €1 billion budget for procuring components into the digital euro, and banks have calculated that they might spend up to 18 billion euros in doing their part of the mandatory activities. So it's a lot of money. We really need to be sure that we're spending it well. Well, so much for the view from the private side, and I hope that we've tickled you enough to create some questions in the audience that we might address. Menno, would you like to give a first try at throwing this microphone?
Just throw the mic and then... Yes.
Yeah, thank you. Perhaps a little blunt, but it's not exactly clear which problem you're trying to solve. And especially driven by the constraint on merely targeting the retail audience, while actually, from a more institutional perspective, I would love this to become available, effectively being able as a company to have an offshore account at the central bank, and cutting out the counterparty risk of a central bank, so of a commercial bank, that's worth a lot. Also seen when it comes to cash distributions within central security depositories. While from a retail payment perspective, it's actually not clear what is this bringing to them or to society at large.
Well, you're not alone, I guess.
I agree that it's difficult in the Dutch context to set up a new payment system and to make sure that adoption is high enough that it becomes a success to any measure you would use. I think success for us would not only be high adoption of the payment system, but also high availability, because we as central banks we want to have an alternative to our current payment system. So success can be measured in different ways, and I agree that ultimately you will need the retail customers and you will need the end consumers to be on board with the issue. But for us, our biggest risk at the moment is that there will be no alternative in the next couple of years, while we would then, looking back, have wanted to have this developed. So it's also the risk of doing nothing while the world is changing around us. But indeed, you need to solve, as a central bank, together with merchants, together with private institutions, you need to solve this issue of who is actually going to use this and for what kinds of payments. And that's something that we are working on.
And what's the reason of excluding the institutional side and merely targeting a retail audience here?
So we have actually two projects. So this is called the retail CBDC in our thinking, and there's also what we call a wholesale CBDC, which looks into distributing ledger technology for central bank reserves. So there's actually two projects that we are pursuing on the retail side and on the wholesale side, keeping up with the developments in the world. Other questions?
Yes, I think it works. Yeah, with the risk of asking the same question again. But for me, apart from the dependency on American banking system, still the reason is not clear. So he asks, what does it bring? What is the reason for this project? You say, okay, in a few years we don't want to regret having not an alternative. But what is now the reason to create this alternative? To me, it doesn't add anything to the normal euro we already have.
Yeah, and you're a Dutch consumer, I suppose.
Indeed.
So if you look at the payment system at large and look at at Europe from a payment angle, and you actually showed the map with all the different solutions, we want to have a European solution that could work everywhere for all consumers and all shops. And the only card that you can use now in those different countries is your American issued card. So for us, it's really about making European payments more European, and we would like that the private sector would come up with an initiative, and we actually see some initiatives for that. But we've tried for 20 years to set up a private European payment scheme, and it always failed. And the small successes that we had were actually bought by their US rivals. So for us, it's also about the strategic autonomy, making sure that Europe is more or less self-sufficient in payments. But I understand that that's not convincing to the Dutch audience that has Ideal, that has a debit card that works everywhere, that has Tikkie. So I'm not here to convince Dutch consumers individually. I'm here to show the bigger picture of why the Eurosystem, as central banks, is pursuing this project. And the translation to what it would mean for consumers, that's something that we have to work on in a later stage of the project.
Thanks.
It does actually touch upon an interesting thing that, so indeed, as Menno mentioned, for a long time, no solution native to the Eurozone has emerged. So it's all either patchwork of local stuff or this American infrastructure. And now we actually are in a world where two solutions are competing to fill this space: the digital euro on the public end, and on the private end there is also projects going on to create a European solutions. EPI, the European Payment Initiative, being the most relevant one in this part of Europe. There's also things going on in Southern Europe, and those are being merged. So now we're in this other end of the spectrum where there's two solutions competing to resolve this issue of not having a European payment infrastructure. So we're always in some kind of trouble, if you might say.
Absolutely. You think you can throw it for 10 rows? Oh, okay. Oh, not bad, not bad.
All right.
Whatever it takes to get to ask a question. So Jakob Laur for Handelsbanken. So I'm talking here from a Swedish perspective. I know we're outside of the EU, but we still follow this very closely. I think what I, who work for a retail bank, wonder when I listen at this is essentially what you're building is a P2P network between every sort of, euro customer. So when there then, let's say this deploys and there's suddenly a problem, is there going to be a helpline to the ECB that I, as a retail customer, can call? Because essentially this is what retail banks do. We take care of customers. Is this the ECB's goal then to, to do that? Because that's a pretty ambitious objective.
Yeah, so unfortunately we've closed our different branches in the Netherlands as a central bank. We used to have branches spread all over the country. So for the digital euro, it's foreseen that private banks distribute, they onboard their clients, they distribute the app or infrastructure that will be needed, cards perhaps, and they would also do the client-facing interface, so they would also take those questions if that would come up. So not a role that we foresee as a central bank. Obviously we as a central bank would then be the first contact point for those PSPs and banks.
Oh, okay. So you mean when the system has a problem, the bank would call you guys, but
Absolutely.
you would still have to have this enormous network that you would maintain.
Absolutely, but
with all the DORA, requirements and everything that comes with that.
No, absolutely. But we already have this network through the target payment system. So all the European banks are already clients with us and have funds and have daily contacts. So there is some leverage there, or some experience there that we would have.
Okay. I would thank you for the clarification.
Yeah, thank you. Thank you for the question. I'll get to you.
Hi.
Yeah.
I completely agree to the problem with statement which you have just shown, and there is a solution to this problem wherein it has already been implemented in India. It's called Unified Payment Interface, UPI system. So whatever challenges you have mentioned over there is completely taken care of in India already. That's the Central Bank of India is governing it. The banks are owning it. You don't need an Apple Pay or NFC to pay through your phone. You just need to scan the QR code and you can pay it. So any challenges to replicate or implement that system over here?
So we are looking at, we've looked into UPI, we've also looked into PIX in Brazil, which is a similar system where there's this close cooperation between private and public institutions, and I think that's why it became such a success. So I agree that UPI is something that we should try to mirror as much as possible. At the same time, I'm not sure if QR codes would be the way to go in Europe. So there's also a lot of differences between countries and between continents in this case of payment habits and how you could possibly introduce such a system. But I think UPI was indeed a big success, and it's something we should try to mirror. Absolutely. There was a question here, but maybe go there and then the final question here, because I think we're almost out of time. Yeah.
I would be curious to know if you would also allow non-regulated entities, non-banks, to start, and like small startups, entrepreneurial entities, to introduce systems based on the digital euro that actually may kickstart and enable things, and you don't have to wait on
There was also a message in that question. In the current proposals, you either have to be a bank or a PSP licensed institution. And a PSP license is obviously, under PSD2, is a much easier license that you can get also as an upstart, as a young upstart, than a banking license. So there is indeed a broader ecosystem than just banks. Maybe, can we do a final question here?
It's interesting though that currently the regulation is around what you do with money. So if you attract deposits, you're a bank. If you touch money, you're a payment institution or an EMI. And here, you're just like the service channel between the customer and the money, which is actually at the ECB. But still, you will need to have this license. So it's also an interesting evolution of the whole regulatory system that's riding on the back of this development.
Here on the row 5, first seat. Yeah. Oh.
Thanks. Just to address the questions or the queries around the why and the fundamental use case in Europe, and to make a link with the earlier speaker, 2 weeks ago I was at a post-trade conference in Stockholm, and taking the Arlanda Express, I had to work out which payment mechanism with my card to get in. I arrive into the airport here last night, and I come in with the sustainable way on the train, and I could pay with the card. Then I had to take the N26 because of my luggage, the one stop, and I had to download another app and work out the payment mechanism. So while it's very much solved within individual national borders, it seems like enabling that use case P2P across the EU seems like a welcome development. But given the lack of incentive or business incentive to deliver it, it's not a small challenge. Yeah. Thanks.
Thanks so much. Thank you. I think, yeah, we're out of time, right? So any other questions we'll take offline.
I think about through the time. Thanks, Menno and Marnix. Yeah, an awful lot of questions, so the topic is really vivid, I would say. Thanks very much for introducing it, and I'm looking forward to see it happen, of course. Well, thank you very much.
Thank you.
Okay.